Scott, Steve, what's happening? Happy
Ooh,
Monday, and happy Monday to everybody in attendance
happy
as
Monday it
well.
is. TGIM.
I think that's a band name from the '90s. Happy Mondays.
Oh, I
Um,
see Andy Swan tweeted a lot, and I'm jealous of him for loving Mondays so much.
all right, everybody, welcome to another edition of Office Hours. I'm Jamie Hodge. Got Steve Gomez riding shotgun with me as well. Before we get into the good stuff, just want to take a moment to do that lawyer thing and just make everyone in attendance aware of the fact that we share information with you here. It's trading related, but it's for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker guy. If you need that type of investment advice, we are here for your entertainment and informational and educational purposes only. So, having said that, for the new people in the room, uh, not only do we have one-of-a-kind award-winning software in the scanning field, but we've also created quite the community around that technology. So it all kind of starts off with Barry's trading room, which he opens up 30 minutes before every open. The good thing about the trading room, other than Barry moderating it and calling out his trades in real time as he uses our software, is the price of 0.00, right? It's free. That's one of the benefits that you get when you use Trade Ideas. Free trading room. If you haven't been taking advantage of that resource, by all means get in there. We have had some little issues here lately, but I think they're in the process of getting cleaned up with some stubborn login credentials and whatnot. But the development team is aware of that and is working to remedy it. So sign up for the trading room, get in there. The sooner you do it, the better off you'll be, especially if you're new to the game of trading. Of course, today is Monday. You get myself and Steve. Steve is going to take the helm tomorrow for the trade of the week. And these are all the 5 p.m. Eastern webinars, by the way. Now, we do something a little bit different on Wednesdays. We bring in Dan Merkin, the founder and CEO of Trade Ideas, along with our Chief Technical Officer, Brad Williams. Always good to hear their take on things. It's always entertaining. And on the 5 o'clock webbies, we let Andy round it out on Thursdays with Andy's Trading Studio, and I ride shotgun with him. Now, come Friday, we do it a little bit differently. No 2 o'clock webby. We start at 11 a.m. Eastern, and we go until 2 p.m. It's a 3-hour support session for just about anything Trade Ideas related. And typically, you got myself, Sean, Andy, and Steve in there, so you get 4 brains working on the issue. So definitely take advantage of that resource as well. That's every Friday, 11 to 2 p.m. Eastern Time. Now, in addition to these webinars, all right, 5 already, we not too long ago implemented TI University. We used to offer one-on-one training sessions to all of our new clients, but we've got so many clients now, it's just not feasible to do that. But we've been getting a lot of great feedback on the TI University. So beginners, which was today, 101, moving along Tuesday, Wednesday, Thursday, all the way up through advanced on 401. So we do recommend that you take these in order so that you can build on 101 and know what's going on in 201 and so forth and so on. So we do recommend that you take those in order. But once again, that is another free resource for all Trade Ideas users. Even if you're not, even if you might be kicking the tires, hop on in there, see what it's all about. So all in all, 9 different webinars every week. So take advantage, and we'll see you in there. Of course, we always like to point out how everyone's been reacting to the release of our first AI module, which was right at the beginning of 2016. Of course, you can see if this, this is in essence a chart. We had a little breakout there when we unleashed the AI to the public. Now, in the meantime, we've brought 2 additional AI modules online. And of course, we'll talk about all those here in just a moment, but we've got Holly Grail, Holly 2.0, and Holly Neo, or what you could call 1.0, 2.0, and 3.0, with more .0s in the hopper as we speak. So more good stuff to come from the AI as well. Now, of course, today's agenda. And in keeping with tradition, time to talk about the overall market, which we have our in-house expert technician, Steve Gomez. Steve, are you ready?
Ready,
All
ready, ready,
right.
ready,
And
ready.
pass that baton without falling down, Jamie, and you did it.
All right, look at you guys. I'm all prepared for you. I saw your notes on there. One of them talked about the IWM and small caps. We'll get to that. Let's start where we always do. And last time I broke these down was Thursday as I filled in for Andy in the webinar, and I was basically looking at this one pointed green candle here. The tail shouldn't be there, it should be more of a gap. So coming off of that, which basically said on Thursday, there is once again zero bear case to be made. It's hard to make bear cases when the markets, especially the S&P 500 here, gaps up and out of a nice cup and handle formation on giant volume last Thursday. That's just a shot across the bow for any stubborn shorts that are out there. Now, of course, nothing moves in one direction for too long. Markets have to breathe, and they often do. So after that big move, there was a nice round on Friday and today of backing and filling the gap and backing up. But a nice little wick, a little bottoming tail wick there. Always like to see those in uptrends. Tells me that buyers came in and supported the price as it dipped below those key averages that were also supported back here in mid-September. So a beautiful breakout, and then I hate to say it, but it really is, it's almost textbook in this new market that we're in. Price action just loves to take 3 steps forward and 2 steps back, and so that's what we've done here. I see no concerning items here. The close was above the rising moving averages, right at that for the most part, pivot level that we were at before. I see strength hopefully coming up and out of the S&P 500 based on today's action. There's nothing to get upset about. Where there was a little concern last Thursday and even earlier was the fact that the NASDAQ, in terms of the Qs here, they've dipped back below their respective pivot line and spent a couple of days down there. Well, today, back into play, back above the pivot line, closing above the pivot line, back above the 10, the 20 moving averages, and more importantly, closing above those moving averages as well. So whatever murmurs were happening over in NASDAQ land last week that I pointed out, can't even point to that this week. It's all everybody hears is 401k should be on highs, the markets are at highs, and S&P and the NASDAQ certainly do fit that bill. Then we get over to the lowly IWM, and we're just not having any real participation in the small cap land. All of these charts I just went through kind of had their respective pivot line, and this is the IWM Russell 2000's respective pivot line. Well, unlike the spiders and Qs that popped back above their respective lines and closed, the IWM is wallowing back down here in kind of no man's land. So one of the things I will be watching, as you can see, that blue line is the 50-period moving average. It did tap on that this morning on the daily chart here and trade through, and then buyers came to their senses and bounced kicked the price right back into play. But this chart is just not looking as solid as the S&P chart and the Q chart. So a little bit of catch up needs to be played over there in small cap land, IWM. And then, I was referring to your father's Oldsmobile so many times. The Dow finally got its all-time highs on. So ATH, golf clap for the Dow. And that respective line right there is prior all-time highs. So we closed above Thursday, we closed above Friday, gave a little bit back into the gap today. Maybe we'll give a little bit back to this morning, tomorrow. But here we go, 4 nice moves upward and a little bit of give back there, maybe 30% off that last push. So expecting maybe the Dow to dig in here as well. So spiders, Dow, and NASDAQ looking pretty good. The only real caveat of mediocrity is the IWM out there. So, keep an eye on these respective climbing 10-period moving average and 20-period moving average, because if we get a close below these two guys, well, I'm going to be a little nervous. We got one back here, but quickly kicked back into gear. We attempted back here, but recovered. We attempted on these lines and recovered. We kind of attempted here last week and recovered. So those lines need to hold. Otherwise, I'll be singing a little bit of a different tune if we start to get some closes back down in these ranges that we've cleared out of already. We should be moving higher. but there's no real concern for give back. 2 days of red candles is normal give back in the course of a nice broad-based rally trend, which we are seeing in the S&P 500. So that's all I really have today. Not much has changed from last week, but that's what I got. Mr. Jamie, anything you want to add?
Nope, good stuff. Of course we would pop that high and cycle all the way back down to what could be perceived as, about as far as we could go before we bounce. And then the wick down today,
Mm-hmm.
I'm assuming that wick is real, whereas the one from
Yeah.
a couple of days ago shouldn't be there. But yeah, I mean, it is what it is. Not not too terribly surprised to see this little pullback after ATH was popped in the SPY. So we'll just have to see what moves forward. Um, let's
Looks
see
like this
here.
290 level was pretty solid today in the intraday. We tested it once and then tested it again and then bounced off of that. That's what gave us the daily candle bottoming tail. So that's what it looks like inside the day. No complaints from the bulls there.
Right, and then just, with the people that we keep up with, and as far as the technical space goes, nothing's changed, just taking a little pullback before probably assaulting those highs at some point in the future. We will see. We've all got front row seats. All right, so let me grab the screen back here. Okay, you should have eyes back on my desktop, I hope, anyway.
Yes.
All right, perfect. Okay, so let's proceed with the show here. And Bill was asking a question. I've recognized Bill. He's been around a while. He was asking the question of, well, can I point Holly to just large cap stocks? Unfortunately, we can't do that right now because really what it depends on a stock being issued is which strategy made the cut. Some of those strategies are going to trigger large cap stocks, small cap stocks, anything in between. But we can quickly see what the market cap is. For example, and I know I'm getting a little ahead of myself here, but this is a good point to kind of lead off with. I've got the Neo module pulled up right now, as we can see right here, Holly Neo, and we can always change by right-clicking and just picking the segment that we want to see. But, here I have it sorted by risk on, see what was the biggest winner, what the losers look like, and nice, looks like a 50-50. Neo only spat out 9 trades today. It was up 86 cents. Nothing really to write home about, but getting back to the large cap, small cap issue, RDC, the best winner out of Neo today for 56 cents on risk on and 55 cents. Risk off, not that's about the smallest risk on, risk off spread I've seen in a while, 1 penny. Not really worth chasing after that. But we can quickly see here via a single stock window, market cap for RDC 2.29 billion. So it really just depends on what you consider large cap stocks. Everybody's opinion is a little bit different. Some people are sticklers and want that 5.2, 5.6 billion, which is what you need to get into the S&P 500. My take on it right here with my Turbo Up family is I consider large caps to be capitalized in excess of 4 billion, right? Mediums 2 to 4 and the smaller ones under 2 billion, but everybody's got their own preferences. So just keep that in mind as you double click from any trade from Holly, you can quickly see what that market cap is, see if it meets your requirements there.
One of the things I typed to you, Bill, don't forget we have that link at the bottom of our webpage under frequently asked questions, FAQ. It gives you a thumbnail strategy of all the Holly strategies. So you could go through there and read them. And we tried to clarify which ones have, focus on stocks between $5 and $15. And there's probably a few of them in there that are going to show you stocks that do focus on the higher priced ones. So you could at least narrow those down and understand which strategy you might want to keep your eye out for just in case something does come to your liking.
Right, and just to give a visual of what Steve is talking about, I just went to our homepage, scrolled all the way down to the bottom, and then you just click on AI strategies there. So it never hurts to kind of peruse all of these strategies, see which ones may or may not be spitting out the plays that you're looking for. Okie dokie, moving right along here. So of course, I like to start out with kind of, after the first 15 minutes of the market, reaching down, throw a little grass in the air, see which way the wind's blowing. And the wind was blowing south this morning. So let's take a peek at what my compare count was. And of course, I had it right here, but I got a little happy with closing out some tabs here. Give me just 1 second and I'll show you guys what my readings were after the first 15 minutes today. Okay, here we go. All right, so here's what my compare count readings were showing on what I consider to be the larger cap stocks, anything over 4 billion, looking for those digital footprints in the opening 15 minutes that the institutions sometimes like to leave behind. Sometimes they're bigger than others. But on a day like today, seeing 53% to the downside doesn't necessarily make me, just go, oh, I'm taking every short trade that's coming out. Well, since we're still in a bull market and just a few days ago we were popping all-time highs, yeah, we're taking a little pullback now. So do I just blindly rush in and start shorting everything? No, but what, the big takeaway for me today was, well, longs are going to be maybe sparse and maybe not a whole lot of follow through on the average, right? And then of course, there might be some good downside momentum today. Well, if we're looking at what's going on here 15 minutes after the open, and we pull up yield SPY chart here, and we're looking at 15-minute candles here. So we can see this little wiki 15-minute candle looks like it closed though back up at 291.42, and then look what happened to the market after that. All right, so a decent downside reading, wasn't anything to write home about. Usually it's not until we get over 55% one way or the other, but a negative bias nonetheless. And sure enough, after the first 15 minutes, the first draft that we had was down. No attempt to close that gap after the first 15 minutes. Go down here and snuggle up nice and friendly with these guys. No big surprise there. But uncanny how accurate this specific compare count window has been, especially over last week, to the upside, to the downside. What I've started to notice is this gap is a little bit bigger than some of the ones we had last week. But last week, the theme seemed to be small gap up, continue that way. Small gap down, continue that way. Today, a little bit bigger gap, but still a continuation in that direction. So always good to have expectations, and my expectations have been pretty accurate as of late, and that's always a good thing going into each trading session. Okay, so that downward move was confirmed, and we put that little bottom back in. Did have a nice little, well, can't say it was nice, so just an upward grind the rest of the day. Not the easiest market to trade. Don't like using the word easy when we're talking about trading the markets, but I think everybody gets my drift. So let's talk about the Holly, or the Hollies, I should say. Why Buddy Holly's popping into my mind all of a sudden when it never does when I talk about Holly, I do not know. Maybe it's just the fact that it's Monday. So it was Holly 2.0 that kind of stole the show today. Now, let's just look at the overall specs here before we dig into the individual trades and talking about the ones that were good candidates for risk on, risk off today. So the entire cluster, and when I refer to the cluster, I'm just talking about the three Hollies. Once again, circling back around to my expectations. Might be kind of slow on the long side. Now, if you've been paying attention over the past few weeks, this is a relatively low trade count for these three modules combined, 37 trades. Usually we're seeing 50 and more, right? But 9 from Neo, 24, it looks like Holly 2.0 was busy as normal, and of course won the day as far as point total, but Neo and Original only popping out 8 and 9 respectively. Neo coming in here second, and Holly 1.0 just basically grinding to stay flat or up slightly. But $3.31 on 37 trades, or if we do the math, right at 9 cents a share. Still not bad for a slow day as far as signals go. And not only did I see Holly trade lighter today, but my favorite group of high volume windows, really thin. I mean, a couple of times today I had to look at my toolbar and go, have I been disconnected? Is my internet going out? Because this window that's usually pumping out tons and tons of stuff, look, this is the whole history right here for the day. Usually I have to scroll if I want to see all the way back down to the open many times. But look, I can get it all just by going like that today. Um, you know, there's not a whole lot of things hitting all-time highs, doing that volume. So for me, kind of a thin day as far as signals go. Of course, I know somebody's going to ask about a particular stock today. Well, we'll see. We'll see if that symbol hits the old question panel today. And if it does, we'll talk about it. If you don't know what I'm talking about, well, think on it for a second. Okay. So let's talk about risk on and any potential trade arounds that we could have benefited from today. Nope, not EVH, but you got my curiosity up now. Let's just take a peek. No, no, not
I think you're talking
EVH.
about TL. I'm not going to let the cat out of the bag. I'm sorry.
I'll just say it starts with a S. Starts with a S. No, not Ameren. Keep guessing. I'll let somebody know. I'll keep my eyes on the question panel. I'll let somebody know if they get it right. In the meantime, let's talk about a little risk on action here.
I know,
Let's
but I
just
cheated, so I can't say anything. Because I looked back in our chat.
yeah. Chris got it. Chris got it. Dolores got it. I mean, I knew people were gonna, know what it was because you just don't see stocks that do that every day. And we'll kind of save that one for the end here and just kind of pluck out some of the juicy tidbits that might have been used to find something crazy like that. So let's just stay on NEO here for one momento and let's just talk about this RDC, which was spawned via the breakout strategy today. And let's see, how did breakout do on the overall? Spit out 3 and 1, 2 of 3, 2 of 3, not too shabby. But really, not a whole lot of risk on, risk off spread. There's no spread. 1 penny is virtually no spread, right? But a beautiful entry nonetheless. Can't say completely pain-free because that's when it doesn't ebb and flow around the entry line, but almost pain-free. I mean, just a nice little, move up here. Now, what I really like about this one is after you get in and you've been in it during the duration here, which number one, why did Holly get out? Because we can see here, this is a pretty big shaded area here. Let's see, that trade, yeah, it was spawned later in the day and pretty much held the entire time. That's why we have a timed exit here. But what I really like about trades like this when Holly gets us into them, or you're in a trade like this, whether it's manual or Holly generated, is as we were cruising along sideways here, just slightly profitable, we get a nice little tight consolidation area, right? We all know, what does that mean? Well, buyers took control here, took it up a notch, but when there is heavy volume, and we can see RDC today did finish the day trading or showing a relative volume of 2.69. On the 3-month average, it usually only hits 2.7 million, but came in with a hearty close to 7 million shares today. So the volume was in it, but after we get this little up move, what happens? We get a little consolidation. 15-minute time frame would look very similar on the 5, just stretched out longer. But what does this opportunity present right here? Buyers and sellers have become equal. That's why we're seeing a flat line, but it gives us another opportunity to leverage the position. If we're in the trade right here, we're going sideways, all great. We're in the money, things are working. We can stick to our original stops or adjust as time goes on. But this one would have, once again, leveraging the position here. Not a whole lot as far as risk on, risk off goes, but being able to leverage off this nice tight consolidation and maybe bolster the position right here and really take advantage of a trade like this. Whether it's a slow day or a busy day, doesn't really matter. Once we see these trades unfolding like this is a really great time once it makes that second break there to add to the position. Even though it's not technically a true range breakout, it's still a breakout from this little consolidation area. The big wick here kind of ruined the chart as far as this one being the high, but we can still see it ebbed and flowed right around the top of that candle body. So this one was really good because we had a chance to add to the position, which for a lot of us, especially people new in the game, that's one of the harder things to bring yourself to do or to get in the habit of doing. You always hear that add to your winners, cut your losers when you're supposed to, but add to your winners when the opportunity presents itself. And even though there was no big spread between risk off and risk on, we sure had the opportunity for a nice clean addition here to leverage that position. All right, Steve, I see you knocking out the questions. I will proceed then. All right, so one more trade I'll tell you what, a couple more trades from Holly Neo here because we want to get down to this short trade as well, which worked quite nicely. UNFI, a little bit of risk on here, 26 and 34 cents. So we had maybe another 8 cents there. Spreads were small today. It was just the nature of the day. No big surprise to see. Spread between risk off and risk on a little bit larger. And from a percentage basis, quite a bit larger, over a 2x, right? From 12 cents to 32 cents, leaves an extra 20 cents in there for risk on dabblings, right? And hey, what a beautiful entry up here from Neo, short ACXM today. By the way, what was the volume on UNFI? I like this because once again, RDC 2.69, UNFI finished today at 2.7. So once again, when you're sizing up these Holly trades, glance down here at your single stock window. See what the volume is. That was really good volume in both of those trades there. ACXM a little bit lower, just finished the day 20% above normal volume. But hey, sometimes slightly over relative volume gets the job done as well. And sometimes with these statistically weighted plays, volume's not even greater than normal, and we still have nice moves. So it's not a must, but it's a nice bonus. So looking at the really nice entry here that Holly took, once we get the entry in this candle, we get a little ebb and flow right around that entry line, but boom, during this 15-minute candle, we really get a nice push down. By the time Holly closes it out for a profit save, which we can see right here, there was a little bit of meat left on that bone, not only in risk on, which is recording it as of the close, but also like to point out this column, which I've been kind of put in the closet for a while, but now's a good time to bring it back out. We can see the max you could have taken out of that trade during this time down here, 41 cents. So some nice spread in between risk off and risk on there. Had we, thought there was a little bit more downside into it, we could have always taken half off, taken half of the trade off with Holly in risk off mode. And if we like what the chart's doing, go ahead and keep that other half for a little bit more. And of course, if you do go about what I like to call the 50-50 model, which is doing half with Holly on risk off and keeping the other half for risk on, assuming you like what's happening on the chart, is setting stop or break even, your stop loss back to break even as opposed to keeping your hard stop. Of course, some people are sticklers for hard stops, but if you want to ensure the trade remains a winner on that first lot, you just set your stop to break even. That way, if it doesn't give you more, it doesn't take a whole lot back. Maybe you flat, maybe you lose a couple of pennies, but that's a great strategy moving forward until you get more comfortable with going risk on perhaps a whole position. So let's focus back on this max profit column again. How many trades did Neo spit out today? 9 trades. And all of them were in the money at some point. So if we kick out this one that was only in the money a total of 3 cents, well, even on the losers, that initial push was in the money, right? And everybody's got different parameters. One thing that holds true about trading psychology in general is everybody's got different break points or different pain thresholds. So as long as you're clipping out a little bit on the first move and doing something similar to what I just described and going risk on with Holly, well, then that's going to help you keep your sanity, because Steve likes to talk about the 2 demons that sit on your shoulders every day, fear and greed. They're always there. They never take a vacation. They're never totally satiated.
One of them is just stronger than the others at times.
Exactly. So if you can just feed them a little bit, you keep them satiated. Don't feed them too much, but you make them happy. They shut up. So just keep that in mind as you move forward. Things that we, hey, this one was a loser. It got stopped out, but it did go for a little bit, right? And of course, I'm not saying that, I've got clairvoyancy here and I can say, oh, well, I definitely would have got out of this one, or I definitely would have got out of that one. But just keep that in mind. You can't go wrong taking a little bit on the first push and managing the second or the third part of that position strictly in accordance with the Holly rule set. So I hope that makes sense.
I just wanted to jump in, Bill. I just let Michael know that we have a new strategy straight out of Complan, and it's not being defined on the thumbnail. So since he's the one that wrote it, I want to have him give his 2 cents on it, and we should have something up in the next day or two on that. So thanks for catching that and pointed it out. As you can see, it does take a village around here sometimes.
Yeah. Since that one just came out last week, this probably hasn't made it in there yet, but we'll get right on that. All right, so now let's look at Holly 2.0 today. And by the way, I did only one short trade from Holly Neo today. But as we can see here, Holly 2.0 took a few more stabs at the short side of the market, which we always like to see here. And as you can see, just resorted by a risk on. And we've got our losers down here. We got our winners up here. But look at the top winners as far as risk on goes. Let's take a look at ED. Once again, not necessary, but like to see this. ED finished the day trading about 50% more shares than it normally does. Not a bad entry here. And this one sticks out like the sorest of thumbs simply because of the risk off. And when we look over here, it wasn't a profit save or a reduced risk. Holly's hard coded. Get out of anything from slippery slope after, where you at there, 45 minutes. So that's exactly what she did. She followed her programming. What do we have here? We had a pretty decent entry, and we had just basically gyrating underneath the entry signal for, basically an hour, 45 minutes to an hour there, and Holly decides to close it on that timed hold. Now, this is classic, right? All right, it's moving sideways, just like the long that we looked at earlier, right? So we see Holly making that exit. We could have easily said, you know what, sticking to it. We're flat, but, time is of the essence here. We could have remained in that trade, and sure enough, in the next 15-minute candle, it did release lower. So that's where we're seeing 0 versus 46 cents here. Holly collected 0 using our human chart reading skills. And when I say that, keep in mind, man with machine, right, which is also the theme of our upcoming Trade Ideas Summit, Rise with the Machines. Now, it would be nice if we could just go, okay, Holly, you've got the steering wheel. I'll come check on you at the close, right? But we're not there yet, right? So it's really the chimera that does the best. What is Holly's strong suit? Crunching all these numbers, delivering to us these statistically weighted entries and strategies each and every day, which we are incapable of making those calculations. But when it comes to the charts and the way that we humans like to see them, well, we've got kind of the edge on Holly. So a lot of the times we can discern the exit better than her, relying on that trio for the statistically weighted probability. And in this case, didn't take too much of a leap to go, you know what, I'm just going to keep my stop, maybe bump it up a little bit, or take it back to break even once this candle was done, and we could have gotten paid in this one. All right, so same song and dance as we saw on that first trade to the long side, but patterns inverted this time because it's a short trade. What do we got next here? We got downward dog spitting out PTLA, which once again, real beautiful entry up here, but not a whole lot of juice left on the table here. What do we have, about 7 cents? However, 30 cents max profit coincides with pretty much what Holly took out of it, right? Which, I don't know, Steve, I'm looking at this one and that doesn't make a whole lot of sense. So this is risk off right here, getting out, right?
Sorry, I was typing.
No, I was just pointing out the fact here
The gradient of the color going from a darker shade to a very light shade is when Holly exits.
Right, 9:13 to 10:14. So she was in the trade for an hour, which that is right. Now, what I was referencing here is max profit. Looks like max profit should have been higher than 30 cents on this one because that would have been this time period, right? Or maybe these are just small increments and that's right. But if Holly got out right here and is recording 29 cents risk off, it just seems like this max profit should be a lot greater because that would have been down here. You see what I'm saying?
Oh, mute spaz. Yes, I do see the issue. Might want to bring that up with Dave or Brad.
Right. I will do that. But I was like, okay, my eyes, are they playing tricks on me? Because Holly, get out of here. That's 27.20 down to 26.60. So yeah, that number should be a little bit bigger, but hey, better to undercut it than overblow it, of course. 2 cents here. She pegged this VLO long perfectly, right? So a buck 13 that she took out, had she stayed in it, 31 cents. So, the day felt a little weird, felt a little thin, and then to see the risk off winning the day on Neo and Holly 2.0 makes a lot of sense. It jives with all the other kind of strange feelings and just lack of follow through and lack of signal generation that I saw from all my other windows. So, moving right along here, just not a lot to talk about as far as risk on goes. We could take a peek at Tyson because that looks like a Holly closed that one prematurely. Didn't get close to this. Let's go tighten this up so we can try to see our stop. Okay, so you can see I had to really squish my 15-minute chart to get the stop to pull up here. So Holly did pull the trigger a little bit early on the Tyson trade, and we can see right here she ate a 13-cent loser on that guy. 61.16 seems like the stop loss was maybe just a little out of whack on that one. Let's take a look here. Slippery slope using a 4% stop loss. Okay, well, that's what it is. That's accurate. That's just a big O stop loss, right? So needless to say, didn't get anywhere close to the stop loss. But as this little thing curled over, we were probably down, 61.16. That's right where Holly got out for that small loser. I can't say I would have leaned one way or the other on that one. Maybe as it came back down, but in any case, nothing to write home about there. So once again, kind of just a slow day in the market. The AIs reflected that in the trade count. Not anything left on the table, pretty much, so to speak, as far as risk on, risk off goes. But once again, interesting numbers here on max profit. We got a buck 51 on that one on the top. So yeah, I guess Holly got out somewhere in the lower part of this candle, and the difference at the top, which, hey, are you ever going to top tick a trade, either covering a long or covering a short? The answer is yes, just not very often. It's the exception
I was
and
going to
not the
say
norm.
no.
Well, yeah, one out of 100, right? A couple times a year, maybe. I remember, Steve, back in the day when we were doing a lot of micro scalping and SOS trading and all that stuff, it wasn't that uncommon to top tick something on the smaller time
Oh
frames.
yeah, certainly with fractions, of course.
Yeah. Back in the old days when we had fractions and used the abacus and all that. Okay, so that's pretty much it for Holly. A solid performance to the tune of about 9 cents a share per share traded, which still is nothing to sneeze at, but not the biggest performance, not the worst. We'll see what happens tomorrow. Now, on my bread butter tickers, the things that I like to typically, every day, if you're patient, you're going to see 2, 3, 4, 5, 6 high quality signals, of course, assuming the timing is right and we're not chasing and the risk is in place. That's all clarification there. But even my good alert windows, my favorites, we had a thin trade count today. All right. Composite rating, which is one of our newer filter additions, which has been a big hit thus far. Not a lot on that page either, and I've been kind of retooling my composite rating here and sorting things by composite rating with not a real stringent filter set here. I'm just weeding out all the ETFs and iShares, putting a little bit of a short float in there, and just saying, 250,000 shares traded over the past 3 months to try to get, the super thin stuff out of there. But not a whole lot of stocks in the 90s. Certainly not a lot of anything showing 100 today on this specific list. Not to say that there wasn't one or two out there that cycled in and off throughout the day, but hardly any in the 90s. Just jumping quickly down to the 80s here. And it was kind of like this with stocks ebbing and flowing in and out all day. But of course, throwing in some technical with some fundamentals here, all charts were kind of popping down from their highs, which explains why we didn't see a whole lot of high quality composite readings today as well. Now, I already showed you guys how easy it was for me to scroll through this history here. Usually I have to go down here and hit more at least 2 or 3 times to show me the entire day, but we did have a couple of good upside things pop through here today. Of course, you had to be, I was going to say, if you're watching like a hawk, but you didn't have to today because this thing was moving so slowly. And of course, I've got my sound attached to it. So as soon as I see the beep, or excuse me, as soon as I hear the beep, I just looked over and it was like, what is this today? It's like a snail's pace. But once again, WWE wrestling leading the market today. And let me just pull the window up. I just pulled them out. And of course, what does Jamie like? He likes the nice simple range breaks that are popping through with high volume. And of course, World Wrestling Federation, which I never would have dreamt in a million years back in the day that I would be talking about WWE, but hey, here we are. All we care about really is the chart, and even on this one today, a lot of wicks being put in as that range was taking place. Of course, if you want to play by the rules, we have to use the wicks as the high, and we can see as soon as that one came through here, I was alerted coming through my turbo family up, no resistance, with the added caveat that it's popping out to all-time highs. Of course, we can see it's been doing this a couple of different times and pulling back, but hey, the appetite was strong for the WWE today, and once again, not turning out any massive volume, but finishing the day about 30% higher. And on a day like today, that was enough for a pretty decent move up to the top here. So a little bit of gyration between the entry signal, but then again, we see that a lot. It's not necessarily a bad thing. And about 91.89 up here to the top, about a point on the table there. Once again, nothing to write home about, but on a day where we were just kind of cycling down, not a bad long trade. A couple of others as well. Let's see, MPC right about here. A little more energy expenditure than I like to see, but hey, if it goes, it goes. And if you're willing to accept, I guess risk on this one in the prior 15 minutes, a little bit larger than I like to see, but here we are. Not really the multiple that I like to see as far as risk to reward, almost just a flat there and a lot of energy expenditure there, but the pattern is the pattern. Continues higher for a decent move before peeling off the top and just kind of meandering sideways. Of course, always interesting over here on the daily. Did get a nice little close above that area. Might be one to keep your eyes on moving forward. Now, of course, here's my little play on words, my attempted humor today. Fate was good, but it was late. Fate was late today, and I didn't get the hit on this one at the most opportunistic time. We didn't get it right here. The volume didn't kick in until about right here, okay? So preferably on these, on any other day, probably would have gotten the alert here, but no, volume wasn't kicking on those smaller time frames when we had the crossover here. But even getting it up here, we can see, hey, still put in a good move. But then again, don't really typically make it a habit of trying to chase them past these levels. Of course, we can always wait for a pullback, but this one never really did it in the next 15, 30, 45 minutes. So sometimes the timing is there, sometimes it is not. This one would have worked on a chase, but most of the time you're going to be better off not chasing things, right? Chasing things makes us more apt to get stopped out. So, once again, beautiful chart. Timing wasn't really there on this one. Would have liked for it to been, but when I saw it come up, I'm like, yeah, you know, here's where I would have liked to have had it. Certainly no more than halfway up from this candle here, and it was just too late. And sometimes we just have to say, hey, I like you, but we're not going to risk that money on this one. All right, so 12 minutes left. I think we're all done with the content that I had prepared. Finishing a tiny bit early today, but that's no big surprise because there was less to talk about. So getting back to what we were talking about earlier, what was the mystery stock today? Well, it was this guy. A couple of you guys hit it right, which, as soon as I saw this one later in the day, and it didn't come across any of my ticker windows because it just didn't fit the mold. But wow, what a move from breaking this little range right here of around $8. Topped out the day right about $32. Wow, and we thought TLRY went on a run the other day. I got to looking at this one. What am I going to look at here? Okay, let's squish this daily up. Oh, okay. Oh. $1,400. And if we could go back even further, I think Barry was saying something about $2,000. Anytime I see something like this, it immediately makes me think of badness or reverse splits, right? So, yeah, this one had
Where
a
stocks
huge,
go to die.
yeah, this one did have a huge intraday move today, but not typically something that would pop up on, I don't know if it would pop up on any of your scanners, Steve, or Andy's or Sean's.
I didn't see
Just,
it. It's not what I look
yeah,
for. But to me, this looks like dry ships all over again. I mean,
exactly.
great day today, but what's the next couple weeks going to bring?
Yeah. So hey, if you were in this one, hey, more power to you. I'm glad you made money on it. Just never really showed up on my radar because not really looking for things like this. But what a move it was. And of course, what do you think might happen to it tomorrow? Hey, could go higher, but just my experience from seeing things like this, I'd be surprised if it took another leg up, but who knows? I'm just guessing. In any case, you can bet your bottom dollar it will be active. So if you get in there and try to, maneuver with this one, whether it's long or short, be nimble, be quick, stick to your stop losses. Okay, so I saw a question pop through here about auto trading. Is there an auto trade program plug and play for small cap swing or day traders? And I think Steve just answered that. The short answer, yeah, is the way you ask the question, Jeff, no, there's no plug and play and nothing that you can just, turn loose and go, okay, only do small caps or only do swings, right? Now, in the future, if you do choose to use Brokerage Plus, and in the future, when right now, if you want to automate signals, you have to generate your strategies yourself using our back tester, plug them into B Plus, and then let them do their things. Or let them do their thing. Now, in the future, and what I mean by the future is somewhere around the first of the year, we will give our users the ability to import the Holly strategies into Brokerage Plus every morning before the market opens and auto trade Holly signals if that's where you want, if that's the direction you'd like to head. Now, you will be able to pick and choose the strategies that you'd like to make active. Here I can just say, show me slippery slope. And that's all I see, right? Well, in the future with B plus, you'll be able to say only trade these strategies. And if the smaller cap strategies or the smaller dollar strategies like Little Big Guy, Mighty Mouse, if they do make the cut, well then yes, you will be able to have that functionality, assuming those strategies make the cut. You can just be like, hey, I'll take Mighty Mouse trades, I'll take Little Big Guy trades, and that's it. And Holly will automate those for you. Now, keep in mind, that's not till the first of the year. You've still got October, November, December. 3 more months to go before they're telling us that Holly will be ready for auto trading. So that's excited. We're all excited about that. Everybody's excited, but we still have 3 more months to go. Okay, well, you want to take 1 or 2 chart requests, Steve, in the last couple of minutes, or should we just bring it on into Scott? Okay, well, Scott, if you're ready to walk us out, I think we're ready for you. Are you there, Scott?
Yeah, thank you. Sounds good.
Sure.
Let's pull up the slides again and just hit up some things on the way out after your presentation. We have a live stream available for the upcoming summit. Our in-person tickets are all sold out, so we're going to have a full room. But you can also watch the presenters and then get early access to recordings at trade-ideas.com/livestream. Sign up there and you'll receive updates about how to watch it in real time on Saturday, October 20th. And then you'll get early access to the produced videos as soon as they're available, and immediately following the event to an archive of the YouTube live stream. So you get great opportunities to watch it all, get all that content. It doesn't cost you anything, although we'd like to be able to see you all in San Diego on the 20th. It looks like a lot of you are going to be joining us, so that's great. We've also got an ebook that both Jamie and Steve participated in authoring. TradeIdeas.com/ebook is the URL to go to, trade-ideas.com/ebook. Just plug in your email address and we'll send you a download link. It's got 5 strategies how to succeed in a post-BTFD market, and it's a little choppier than it has been in recent memory. Good advice. It's a free ebook. It's great stuff. Go ahead and sign up for it. We have a podcast. We had a new episode out on Friday, and we're back from the summer break. So new episodes upcoming. There's more new episodes coming soon. So just search for Trade Ideas Podcast wherever you listen to your podcasts. Add the subscription, and there you go. You get all the new episodes as they come out, and you can cruise through the archives and download some of those previous ones as well. We have a code for you to join Trade Ideas and save. Save in SAVEINSEPT for Save in September. All caps. Saves 15% off your first month or year of Trade Ideas. And those of you that are standard members can also use that to do an upgrade. So keep that in mind. You can save the same percentage off your next installment. And we also prorate the upgrades now. So if you're on an annual standard and you upgrade to an annual premium, you don't lose out. You still get to apply the code to save. So thanks, Jamie. Thanks, Steve. Any questions, email us info@trade-ideas.com. You can follow Steve at TodayTrader on Twitter. Jamie's at QuantBot. We've got some other handles too. And find us on Facebook and like our page, Trade Ideas Pro on Facebook. And then you can share what we post with your friends. So thanks, Jamie. Thanks, Steve.
Thank you, Scott, and thank you, everyone, for popping in here. We know you're busy and appreciate you popping in to hear what we have to say. Steve?
See you tomorrow.
See you tomorrow. Bye-bye, everyone.